ELA coin, also known as Elastos, is one of those projects in the crypto space that always sparks the same burning question: is this hidden gem about to explode in a massive pump, or is it destined for yet another painful dump? In today's video, we're going deep, like really deep into the world of ELA. We'll explore its history, its vision, the technology behind it, the reasons it might soar in the next bull cycle, and the dangers that could drag it into obscurity. By the end of this breakdown, you'll have a clear picture of whether Elastos is worth holding, trading, or avoiding altogether. So buckle up, because this isn't just another coin review, this is the complete story of whether ELA is pump material or dump fuel. Let's start with the background. Elastos was founded way back in 2017, during the crypto boom that gave birth to countless projects. But unlike many copy-paste tokens, Elastos set out with a grand vision: to reinvent the internet itself. Yes, you heard that right. Elastos wasn't just about making a faster payment system or another smart contract chain. It wanted to create a decentralized internet where users truly own their data, their apps, and their digital assets. Imagine a world where you, not corporations, control your digital identity. Where every movie you buy, every song you stream, and every file you create is 100% yours, secure, and tradable without middlemen. That's the dream Elastos has been chasing. And that dream is powerful. It's the kind of narrative that can fuel insane pumps when investors start paying attention. But here's the catch: dreams are one thing, execution is another. When ELA launched, it had backing from big names, including early support from Bitmain and connections with the NEO ecosystem. The hype was enormous. The price? It skyrocketed, like so many coins did in the 2017 bull run. At its peak, ELA traded in the triple digits. People genuinely believed it could be the backbone of the next internet. But then came the crash. Hype faded. Investors moved on. The price collapsed, losing over 95% of its value. And since then, ELA has struggled to regain mainstream attention. That's the reality. But in crypto, every collapse is also an opportunity. So let's ask the key question: is Elastos a sleeping giant ready to pump, or is it on a slow march to zero? Let's break this down. First, the bullish case. Why might ELA pump? The biggest reason lies in its fundamentals. Unlike meme coins that exist purely on hype, ELA has real technology. It combines blockchain with a peer-to-peer network and a runtime environment that makes dApps more secure. It also integrates decentralized identity, or DID, which is one of the hottest areas in blockchain right now. Governments, corporations, and entire industries are searching for identity solutions, and Elastos is already ahead of the curve. If even one major partnership lands, or if DID becomes a mainstream narrative in crypto, ELA could easily find itself back in the spotlight. And with its tiny circulating supply of just 28 million tokens, scarcity alone could drive the price parabolic if demand spikes. We've seen it before. Low supply coins can move violently, turning small investments into life-changing gains. Second, the crypto cycle itself. History shows us that every bull market drags up forgotten altcoins. Coins that no one cared about suddenly tanks 20x or even 50x, simply because new money floods into the space and traders start hunting for low-cap gems. ELA is the perfect candidate for this kind of speculative pump. It's listed on major exchanges, it has a narrative, and it has history. All it would take is one spark, an announcement, a partnership, or even just social media hype, and ELA could pump hard. Imagine this: Bitcoin rallies to new all-time highs, retail investors flood in, influencers start talking about old-school projects making comebacks, and boom, ELA's name resurfaces. Suddenly, the chart that looked dead for years turns into a rocket. That's not a fantasy, it's how alt seasons work, and it has happened over and over again in crypto history. But, as always, there's the other side of the coin, the bearish case. Why might ELA dump? Well, for starters, competition. Since 2017, the crypto landscape has exploded with innovation. Today, we have Polkadot, Cosmos, Avalanche, and dozens of other projects pushing interoperability, scalability, and Web3. Elastos, while ambitious, simply hasn't captured the same developer attention or ecosystem growth. The truth is, crypto is a fast-moving game, and if you're not constantly evolving and grabbing headlines, you get left behind. Investors chase the shiny new thing, not the project that's been silent for years. Another issue is adoption. Let's be honest, how many people do you know who are building on Elastos right now? How many mainstream apps are powered by ELA? The adoption curve is still small, and without a vibrant community or major partnerships, the token struggles to generate real-world demand. And that's critical. Without demand, price pumps are short-lived. You can get a spike, but then the dump comes fast as traders take profits. We've seen this cycle play out many times with ELA, a little excitement, a price surge, then a brutal correction. Tokenomics also pose risks. While ELA's supply is capped, the distribution has always been a topic of debate. Critics argue that too much of the supply is concentrated in the hands of early investors or foundations. That kind of centralization can spook new buyers and can lead to heavy dumps whenever big holders decide to sell. Combine that with relatively low trading volume, and you have a recipe for extreme volatility. For small traders, that means recursive risk. And finally, let's talk about delisting risk. Low-cap coins that fail to generate enough interest often get delisted from major exchanges. If that ever happens to ELA, liquidity dries up, confidence collapses, and the dump becomes almost permanent. While ELA still holds on to listings, the lack of strong growth puts it in a vulnerable position. So where does that leave us? Pump or dump? The honest answer is it could be both, depending on your time frame and your risk tolerance. In the short term, ELA looks like a risky play, vulnerable to dumps due to weak adoption and low attention. But in the medium to long term, especially if we enter a powerful bull cycle, the pump potential is undeniable. The asymmetric risk is what makes ELA interesting. You could lose most of your investment, but you could also see tanks or more returns if the stars align. That's the gamble. If you're a trader, ELA is one of those coins you keep on your radar for speculative plays during alt season. It's the kind of coin you don't marry at just date when the charts look good. If you're an investor, you need to decide whether you believe in Elastos' vision of a decentralized internet and whether you think the team can deliver in a competitive landscape. If the answer is yes, then holding a small bag might be worth the risk. If the answer is no, there are safer bets out there. So here's my conclusion. ELA is a coin with history, with ambition, and with technology. It has the potential to pump hard in the right conditions, but it also carries heavy risks of dumping further. It's not a guaranteed moonshot, but it's not a guaranteed failure either. It sits in that gray zone of crypto where fortunes are made and lost. If you choose to play this game, play it smart. Manage your risk, take profits when you can, and never invest more than you can afford to lose. Because in the end, ELA's future will be decided not just by its technology, but by the brutal and unpredictable psychology of the crypto market. So what do you think? Is ELA the next hidden gem ready to pump, or is it a relic destined to dump? Drop your thoughts in the comments, because this conversation is just getting started.